we certainly hope our kids don't ever find themselves without their parents. It is important to be prepared so that they can be taken care of in case tragedy does find us.
So joining us now, we have Trent Sutton from Siemens Financial Group. He joins us to help make sense of the confusing world that is life insurance. Trent, thank you so much for joining us.
My pleasure.
Just like a lot of the things we've talked about this week, we talked about wills, we talked about all kinds of preparedness. When it comes to life insurance, people aren't always right on the ball getting what they need, correct? A little scary to think about?
It can be, yeah. It can be a little bit overwhelming, and knowing what to get, the amounts to get. Yeah, it's more difficult than what you might think at first thought there.
Mm-hmm.
Well, let's go ahead and start with, let's say, a mom and a dad. They have a couple, maybe 3, 4 children. Let's talk about what they need at this time in their lives. Let's say both of them work.
You bet, you bet. Well, the first item is, how much life insurance do you need there?
Yeah.
And you'll hear lots of, you'll see online, there's calculators, or you'll hear a number. It might be you need 8 times your annual income or 10 times your annual income. And that might be right, but it might not be, because everybody's situation is different.
Right.
And you know, take for you, if you had no kids and you had kids there, if we multiplied your annual income by 8, you're going to have different needs there. And so I think the way that you do that is, there's 4 numbers that you'll take into account as you're getting an amount of life insurance you need. The most immediate need is going to be your final expenses, the funeral, the burial. That's going to be 10 to 20,000. You can probably pencil 15,000 in there.
Okay.
The next immediate need is paying off any debts that you have. Your mortgage, any student loan interest you might have, credit card, any of those. You don't want your family to have to sell the house. The third would be any education expenses for kids. You want to be able to let your kids go to college and be able to fund that. And some parents want to pay more of that, and some want to have their kids pay some of that. That's good for their character there. And then the fourth is, based on your income, if you've paid off all of those debts, how much income do you need to replace? You're not going to need all of that income anymore, because those debts are gone. So if you take half of your income, multiply that out by the number of years until you get to retirement, that will give you an amount of income. You add all of those together, and that gives you a good starting point amount of life insurance you need.
Now, when you're talking life insurance, obviously you think, okay, I need to put life insurance on the person who's the main provider in our home. But wonder if you have a situation where you have a stay-at-home mom or a stay-at-home dad, and just one of the people in the family is bringing in money. Do you put life insurance on the spouse that stays home with the kids?
You know,
or should you?
Well, it's a great question, because oftentimes you think of the primary breadwinner. This is the person we need to have life insurance.
That's the income we need to replace if something happens.
Exactly, but you think about, okay, if I'm the primary breadwinner and my wife were to pass away, heaven forbid, I've got 5 small children, and I think, okay, who's going to take care of my children? My youngest kid is 3 years old. Is grandma going to do that? Are we going to send them to daycare? And I think about my situation. I would want to be the mom. I would want to go home and be able to raise those kids, and I wouldn't be able to continue to provide the income that I'm providing. And so that's a perfect instance. We'd need to have coverage on my home.
And whether the main breadwinner takes care of the kids, or they need to do daycare or something like that, there's value, ladies, in what you do when you stay home. I mean, the cleaning and the cooking and the taking care of children. Someone, still needs to take care of those things. So there is value in that.
Very much so.
Okay.
I very much agree.
So when we're talking, okay, now we've done the calculations. Now we've found out, okay, here's the approximate number. What is our next step?
Well, it's to decide what type of life insurance you need and how long you need that coverage there. The most important thing is to buy a policy that's going to cover you for that period of time. Typically, you need that coverage until the kids are gone, or until you reach retirement age.
Okay.
And there's basically 2 types of life insurance. There's term life insurance, which covers you up for a certain period of time, and then there's a permanent life insurance, a whole life policy, a universal life policy. Very different needs. The least expensive is going to be a term life insurance policy. It'll cover you for a period of time. A permanent is, sometimes people say, I want to have coverage when I die, guaranteed. A term life insurance policy isn't designed to do that. If I'm 30 years old, usually you can only get a term policy for 20 or 30 years. Hopefully I'm long going to outlive that.
Right.
But sometimes a term policy isn't perfect for them, and if they have maybe a child with special needs, or they want to leave money to their estate, or they say, I want to make sure my kids have money there, A term
care of.
policy isn't designed to do that.
Okay.
Only a permanent policy.
And this is just scratching the surface of the insurance questions. So if people have questions they'd like to call, ask you, do you have a number that they can
I
call?
do. I'm here in town on Pole Line Road, 238-1171 at Siemens Financial. I'd be happy to help.
Fantastic.
Sutton, thank you
Trent,
so much for
thank you
joining
so
us.
much.